It's time for Top That Trade. Joining us right now, Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business Network News contributor, here for our Trader Game. Round number one, guys. Earn and burn. What's the better trade? Jumping in ahead of a stock coming out with earnings or waiting until after the earnings news?
Well, if you know the number, I guess you could buy ahead. You don't know how the stocks will react, most importantly. So it depends on your time horizon. I'm an options trader, and I'm always looking 3 to 6 months out. So the earnings can sometimes be a catalyst, but they can be a surprise. The markets have a price which they think they're, going to gravitate to. And if it disappoints or exceeds it, then it reacts accordingly.
I think, we've tampered down earning expectations quite a bit going into this earnings season. So I would be betting that in most cases, you're going to see a pop rather than a drop on most of the earnings for most of these companies. I do think, obviously the inflation fears are cutting into their profitability. But a lot of these companies, if you remember, during the last earnings cycle, warned about this ahead of time. So now they could be showing signs that they're getting ahead of the inflation problem. That might actually be bullish and another catalyst for a lot of these stocks to beat on earnings on this quarter.
Round number two, bankable trade. What's the better buy in bank stocks? Pick one, please. JP Morgan, Bank of America, Wells Fargo, or Goldman Sachs?
I like JP Morgan right now. I mean, Goldman Sachs, I do think is undervalued as well. Stay away from Bank of America. And one of the things I like about Goldman and JP Morgan is their oil analysts who are very, very bullish. And if they're right on that, and I think they're going to make a heck of a lot of money.
Yeah, JP Morgan got a little beat down here in the last year or so, but I like them all. So I look at XLF. I think that's the non-stock specific way to play the financials.
Round number three, inflatable stocks. People talk fearfully about inflation, but traders, they want to make money no matter what's happening with the economy. What stocks do you like at the store or at the gas pump?
I like the gas pump. I like Chevron.
Coca-Cola has pricing power. So they've been able to double the price of their soda. And guess what? I know the price of water hasn't doubled, or they do put a little bit of sugar in there, I guess, or corn syrup. So that's a good example. But every retail company now has the ability to raise their prices because consumers have more money and their incomes have been rising over the last few years. Their house is worth a lot. So people feel like they can spend more money on stuff, and that continues to happen.
Well, yeah, that's true. But, I did read an article just recently about families now complaining, in the family about who bought Doritos or why did you buy that chocolate bar, where before it was like, hey, no big deal, right? But people are starting to watch the cost of their grocery bills go up, and it's creating friction, So listen, I know they're, big picture, it doesn't mean we're going into a recession, but I know if you're on a tight income, inflation is taking a bite. People are feeling that pain. How does the average person, get away with that? And we're seeing it. They're changing their habits. They're being smarter about what they buy. They're looking for value. That means some of those value companies like the dollar store could do very well in this type of environment.
For your bonus round question for today, a stroll down memory lane. If you didn't know it, General Mills has brought back its monster cereals. Can you scare up the phony cereal? Is it Count Chocula, Frankenberry, or Dragonfire?
Dragonfire. That was
Dragonfire. That's obvious.
Yay. All right. 2 winners this week. You guys really know your monster cereals. Congratulations. Go to businessfirstam.com for where to see our show on TV.